Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And it's 2025. So I hope you all had a wonderful break, a good Christmas and New Year. And hope you're all going to have a great 2025. Today's guest is Joe David, who's the managing director of Elementos, who are a resources development company focused on the exploration and development of tin projects and moving them into operations with a focus on jurisdictions that demonstrate high level of governance and foster a responsible approach to mining. Their assets are in Spain and in Australia. With qualifications in mine engineering, civil engineering, and a degree in finance, Joe's career spanned in a number of executive roles with private equity, listed and private mining companies. He's also associate director within M&A advisory, as well as running his own project development and consultancy company. He's managed the development of mining projects, bankable feasibility studies, exploration and metallurgical programs, project financing, corporate finance advisory, corporate strategy, and mergers and acquisitions. So that's a very snapshot of his career, and obviously Joe would tell us a little bit more about how his career has developed shortly. And today he's going to discuss obviously the company and the history of Elementos, talk about the tin market, and also I'm going to provide some advice on those seeking C-suite's role in mining and how maybe best navigate depending obviously where you are in your career, but how to best navigate those. So Joe, welcome to the podcast. How you doing?
Yeah, thanks, Rob. Great to be with you at the start of 2025. You've got to remind the brain, don't you, to say 2025 after what it was a long and busy 2024. But no, we're doing fantastically and looking forward to a very big year for Elementos.
Yeah, great. As I mentioned in the introduction, which was a little bit of a mouthful, I just wanted you to just tell us a little bit about your career and how it developed. So obviously I mentioned that you're pretty qualified in mine engineering, civil engineering and finance. Just wanted me to just tell us a little bit about how your career developed from obviously when you first graduated and the various roles that you've played to obviously where you are currently.
Yeah, thanks, Rob. Yeah, it seems to have done a lot in the years since my university degree, but I think I'll go into that. I certainly describe myself a bit more of a generalist, and I think I think we'll get into it a bit further on. But that decision that you tend to have to make, I think, a little bit earlier than maybe previously, of whether you're going to become a specialist in this industry or a generalist. And for me, when I explained how I've got to where I am in my career, certainly took the generalist path, which can certainly be a frustrating path when you don't feel like maybe you're progressing as much as the specialist early in your career. But in saying that, obviously, it's often the generalist with broad bases of experience that end up, making good people in the C-suite or managing director like myself. My background, as you said, I went to the University of Queensland, a very famous mining school in Australia. I actually did a civil engineering, mining engineering and commerce dual degree, which was quite broad, meant to be done over 6 years. I managed to do it over 5.5 with unfortunately working over a few summers when my friends were doing much more fun things than myself. But for me, I came out to a very buoyant mining market in Australia, in Queensland. This is 2007. Pretty much anyone with an engineering degree, let alone a mining engineering degree, was getting offered roles in the sector. Pre-GFC, coal was booming, specifically in Queensland, and that's where I went in for my first job. So I worked for a coal mining consultancy who basically work for all the large guys in Queensland, BHPs, the BMAs, the BMCs, the Stratas, and the rest of those guys with the large coal mines up in the Bowen, Surat basins, and the Galilee Basin was also just starting at that point. So did a lot of work there. My role was working, again, with the multiple hats I always wore from day one. I worked both with the technical engineers, helping to schedule equipment, through to the business analyst team, where we'd actually cost up really granular level, costing up the feasibility studies, to truck cycles, to matching equipment, through to labour and all the rest of it, all the way through to costing up a full DFS. So for me, I got to see a great part of the industry, both that technical part and that costing part. I did that for a few years. I was fortunate enough in my mid-20s to then go travelling a little bit. I took the opportunity to travel through South America, South and Central America, and then went up into North America at the end of it for about 12 months. So it was my delayed gap year, I guess you could say. And it's fantastic. I learned a bit of Spanish at that point, which has helped me subsequent in my career, as well as just, I guess, scratching that itch early in my career, which certainly when I got back allowed me to refocus on my career. I actually moved back to Sydney after that and moved in with Natural Resources M&A. I think for me, working on that coal mining consultancy side, I got very attracted to working with the higher ups and the senior executives, and my way in to do that, I thought, was certainly getting into the M&A space. I worked for an independent advisory firm in Sydney, and we did a lot of actual Chinese SOE buy-side advisory. We tended to advise Chinese state-owned enterprises on buying mining companies on the international exchanges. And at that point, my major deals were actually Chinese SOE buying out Canadian TSX listed companies. So I got the experience in Sydney, but we did a lot of Canadian deals as well as doing a number of capital raisings, refinancings, and some restructuring work. In that time, as you do, found some relationships with some private equity groups, who then founded a couple of mining companies in Western Australia, including some West Australian iron ore infrastructure studies. I fell in with a pretty well-known family out of New Zealand called the Todd Corporation. They have a lot of interest in oil and gas, but they were certainly pushing into the mineral space at that point. So basically from that point, we did a lot of feasibility studies and project financing work on as I said, everything from 164 kilometre rail lines, 30 kilometre overland conveyors, materials handling. We were designing kilometre causeways and jetties out to a transshipment location. And from that, we were then looking at transshipment cycles and dynamic modelling of how you interact mining equipment with rail, with port handling equipment, with transshipments and ocean-going vessels. So again, just a real breadth of experience there. I then moved into a listed company that the New Zealand family owned a majority stake of as well. And that's when I really got back into the mining side. And we did a lot of feasibility work, metallurgical studies, site mobilisation, all these works with an iron ore project that was going to sit and be the foundation asset to this new greenfield infrastructure in the Pilbara, as well as working with the banking side of the guys and doing some partnerships with foreign capital, including a lot of work with Chinese SOEs again. Basically, at that point, after there was a large joint venture and management buyout, my role there finished. At the same time, I moved my family back from Sydney to Brisbane. And at that stage, I got back into the employment market, and through a recruiting firm in Australia, I found this role with Elementos, and obviously subsequently met with the board. I found we had broad alignment. Certainly, I was aware of tin, but didn't have a huge knowledge base on it. But quickly, after talking to the company and learning about their assets, really felt it was a good place for me. As you know, from my career up to that point, I'd done a lot of work on the bulks, the coals, the iron ores, which I always say you design the mine in reverse. You start with the infrastructure, and it's only towards the end you actually sort of find the ore at the end of it to make sure the infrastructure works. Hard rock base metal mining, like we've got at Elementos, it really is a mine first strategy, and the export of those much more expensive minerals is, I want to say it's an afterthought, but it's certainly less important than getting the mining side right. And then, came into as CEO after about 12 months, moved in onto the board as managing director. And it's been 3.5 years of managing two new assets, two development mining assets, as we continue to do in the tin space. And, recently gone so far as signing some option agreements over some smelters in Spain with the goal of being a vertically integrated tin producer within the European Union.
I would like to welcome our sponsor, Hawcroft. Founded in 1992, they provide property risk management services to the mining and other industries, using their knowledge, perception, and expertise to offer true foresight across all aspects of mining and infrastructure. Their insurance risks surveys are recognised as the industry standard, as their reports are comprehensive, ensuring underwriters are well informed of risks surrounding your operation and quality control of those risks. Working with some of the biggest mining companies in our industry and across 600 sites, Hawcroft offer insurance risk surveys, construction risk reviews, asset critical and speciality assessments for a variety of mining, processing, smelting, materials handling, power, refining, port and rail operations. So if you're looking for a premium bespoke property risk management and risk engineering service, then contact Hawcroft today or visit their website at www.hawcroft.com. All details are enclosed in the show notes accompanying this episode. Thanks for giving that overview of your career. Before we speak about Elementos, obviously you're a young managing director, and obviously you told us how you got the position. What advice would you give to others seeking sort of C-suite roles? Again, I do hear, obviously being in recruitment myself, and I believe there's going to be younger and younger CEOs coming, being in CEO positions, just because of skill shortages in our industry, where a lot of the older generation are slowly leaving the industry. That will obviously open up the gap for younger CEOs younger mining professionals to then step into CEO roles. So yeah, just wonder if there's any advice that you can give anyone that is seeking a C-suite role based on obviously the experience that you've just gone through.
Yeah, okay. I'll certainly talk from my own personal experiences. We both know there's a variety of ways to get into these, and obviously if I start explaining, my preferred path, that might not work for some companies. But I think it's obviously the ultimate thing you need to do is match your skills with the company that requires those skills. Like any job, I don't want to educate you on how to match people, Rob. You've got more experience than I do. But for me, I have always worked on the front end of projects. I've always worked on the feasibility, financing, and early stages of construction and operations in projects. So for me, my natural fit was finding a company that wasn't in the exploration phase. It had defined resources. It needed some extra work to get yourself up to the data for, say, like a definitive feasibility or bankable feasibility study. But the hard work was done. We're not an exploration company. For me, to go into an exploration company, I would not be as good a managing director probably as a very experienced geologist who can certainly direct works. So for me, finding the right company with their assets at the right stage that were really aligned with my experience levels is obviously, like any job, the key way to find the right fit. I guess getting back to my opening comments about being a generalist, I do think anyone looking to take on a C-suite role or move on to the board should certainly look for a breadth of experience. If you are a geologist or a metallurgist or even equities analyst, and that is the only role you've done for 10 or 20 years, I certainly think you're going to have a hard sell convincing a board that you can manage legal risks, you understand the value of a discounted financial model, you understand how capital raises work, you understand geology, metallurgy, mining engineering, geotech, all these drivers. I do think you really need to seek the opportunities to really widen your experience base. For me, as you say, I'm very fortunate to have done technical roles, financial roles, even down to managing remote sites in the Pilbara in Australia and being responsible for people's health and safety, through to being registered exploration managers on site, having that statutory safety responsibility. And then my work, obviously in the banking side, exposed me to how our boards tend to strategically think, how to pursue M&A deals. And obviously, I think one of the most important ones for junior miners is how to raise capital. It's certainly a challenge to raise capital, always is, specifically in our current market. There's a lot of junior miners struggling, and there's some tough times ahead, I think. So I think being able to cover off at least those elements. Probably the one I haven't focused too much on is the commercial side, understanding contracts, understanding the value that technical people or yourself can bring to developing a contract, not just relying on lawyers, is another very key skill to bring into the C-suite. In addition to that, I think this isn't about how you get the role, but maybe the roles you should seek. Certainly also look for a company or the opportunity that has a diversified board for the skills that you recognize in yourself that you might not have as high levels as you desire. If there's other members on the board that hold those skill sets, then I think you might be able to develop a very successful partnership. If you rock up and you're a geologist and everyone else on the board is a geologist and no one has experience in all the other spaces that I just spoke about, well, obviously that could be a challenge.
Yeah. I guess following on from that, and obviously being in the recruitment and career space, I suppose anyone younger listening that is in the mining industry, whether you're a geologist, whether you're a mine engineer, whether you're in finance in mining, and I suppose your vision is to be a CEO one day in the future, I think it would be beneficial for yourself to learn skills outside of the workplace. Now, if you're a geologist, maybe you could do a finance course. Or if you're a mine engineer, do a finance course. And if you're a finance professional, maybe do a short course in mine engineering, whether it's a diploma. So you actually then get to learn the basics of other areas within the mining industry. And as the CEO, you will be covering a lot of different areas and different disciplines being the CEO. So I think sometimes just doing some self-education yourself is only going to enhance your skills and experience, and not waiting until such time where you're in a position to be a CEO. You're already going to have a lot of those skills that you've learned as time has progressed. So that's something I like to add.
Yeah, Rob, I completely agree with you. But I think one thing I'd like to add to that, obviously, I've got 3 degrees and a couple of, other qualifications. I think it doesn't have to be formalized education either. So many ways to acquire knowledge these days. There's a number of podcasts like yourself. When you listen to this podcast, you learn from people. There's other podcasts that focus more on M&A in the mining space, how they do equity raises in junior mining. I think this day and age, obviously, the formal education is fantastic, but there's just little areas where, being open to learning at any stage from any forum can certainly, build your knowledge base. And I think the one thing that I'm certainly not, being a generalist, is an expert in everything, but I know my blind spots. And when I find my blind spots or I'm aware of them, that's when you pull in expert support. So yeah, I think that's very key. The other thing I'd like to add to that, I think education is number one. The other one is that diversity of experience. And I think for me, and what I'd encourage others, when you get to that point of your job where you walk in, especially when you're younger, when you have that energy in your 20s and early 30s, when you walk into the job that day and you go, geez, I've got this all pretty covered, I'm pretty comfortable here, that's the day that maybe you should think about either looking for something new or broadening your experience. Maybe it's within the same company. You don't always have to leave, but having that conversation with management and saying, you know what, I'm pretty across all the aspects of this job here. Give me something else to sink my teeth into. I think that's very important when you're at the early stage of your career.
Yeah. So moving on, why don't you just tell us a little bit about the company, the history of Elementos, and then obviously we can speak about the project as well.
Yeah, no worries. So Elementos, like many companies, has had quite a long history. It listed on the stock exchange in 2009. It actually got spun out of it had South American assets originally. It got spun out of a very successful lithium company called Oropesa, which has subsequently gone on to be merged into billion-dollar companies. In addition to that, so we started the company's, this is well before my time, with being a bit of a gold and copper explorer in South America. And then in the early 2012s, around that range, it actually acquired one of the projects we still have called the Cleveland Tin Project. So it's an old operating tin mine, closed down in 1986. The company, I guess, backdoor listed that into the asset and pursued that as really a low-cost tailings retreatment startup operation. During that process, probably the low-cost startup strategy wasn't proving, like it was going to be financially viable. So the company started looking at the old underground tin mine. And certainly since that point, we've done a lot of work on resourcing up that tin mine. In that time, we got the opportunity, and this is getting closer to 2020, we sort of went on a global search. And I think what we'll cover later on the podcast is how few tin projects and tin opportunities there are out there for both investors, but also project developers. Anyway, we're very fortunate to identify a company with an asset in Spain called the Oropesa Tin Project, a Canadian listed company that was looking to divest the asset, and we managed to acquire that. The deal closed in late 2020, and we've been in control of that asset ever since. I came into the company the back end of 2021. The midway through 2021. Really when, as I said, both assets had quite mature resource bases, and the company decided they want a full-time dedicated CEO to be dedicated to bring those two projects through to definitive feasibility studies, project financings, construction and into operations. Now, we'll get onto the assets, but we're obviously still midway through that process. But yeah, very happy to be one of the few companies holding two tin development assets. They do happen to be on the other side of the world, which makes for quite long hours for a managing director. But we're well placed to play a role in what looks like a very constrained and supply short tin market moving forward.
I wonder if you just give us an overview of both of those assets, just so our audience knows a little bit about both projects.
Yeah, no, thanks, Rob. So I guess I've mentioned both our assets so far, but I'll start with our flagship asset. Our flagship asset is the Oropesa Tin Project. It's located in the Andalusia, which is an autonomous region in Spain. The autonomous regions in Spain are very autonomous. Probably everyone's familiar with the Catalonians in Barcelona, semi-regularly trying to secede from the rest of Spain. And Andalusia is very independent in its own right. All our approvals are Andalusian based. There's very limited national overlays on that. So we're sitting in Andalusia, and why I've mentioned that so much is Andalusia is Spain's major mining region. That is pretty much the hub of what people refer to as the Pyrite Belt. Pyrite Belt hosts, a lot of base metals, but predominantly in Spain, the main output is from the large copper miners that are in the region. And there are very large copper miners. Grupo Mexico, one of the biggest mining companies in the world, is just restarting the Los Frailes mine. You've got Atalaya Mining, which owns the original Rio Tinto copper mine, which they have operating. And then you've got the large Australian copper miner, Sandfire Resources, working on the Matza copper project. And then you have a couple of juniors like ourselves operating in the region, but it is a very stable, highly regulated mining regime. 90% of Spain's mining revenue, or metal mining revenue, I should say, comes out of Andalusia. So we're very happy to be there. We're a state significant project in Andalusia as well. There's only 7 mining projects that have state significant status, and we are one, and we are the smallest by far. But basically what that gives us is a very significant level of government support to promote our project. We have dedicated government resources which help us navigate the approvals and permitting system in Spain, as well as supporting us in other ways. So yeah, that's Oropesa. We're at the back end of the work. So as I said, all the expensive groundwork, engineering studies and that have been completed. We're really in the final phase of the DFS, definitive feasibility study, which will be used to go seek finance. That should be out by the end of Q1, the end of March this year. In addition to that, we have resubmitted our permits for the project, and there's 2 major projects we're applying for. That is a mining license application and our environmental license is the simplest way to put it. So the 2 primary licenses, we're forecasting them to get in receipt of those 2 licenses and be permitted to start construction by the end of 2025 this year, or just into the first quarter of 2026. So basically between the DFS study and the permitting, we'll certainly be regressing all the project financing aspects. We're already in detailed conversations with a number of debt providers, as well as a number of equity partners and parties that can assist us raising the equity to finance the project. Our last published study, pre-DFS, has a capex sitting just under 90 million US dollars to bring on the project. So in the scheme of global mining projects, it's not a large amount of capex. The project will produce about 5,400 tons of tin concentrate per year, which is about 3,350 tons of contained tin. That's about 1% of the global tin market. But why we're so attracted to this project and what has made us focus so much on it is there are currently no operating tin mines within the European Union at all. There's no domestic supply. All of their supply is imported, majority from South America and Indonesia, or it is smelted from recycling sources. So the EU is very, very dependent on quite a stressed tin supply market. So for us to produce tin concentrate within Andalusia, within Spain, within the EU is obviously a very strategic decision for us. In addition to that, we have signed an option agreement last year, in May last year, which will give us, it's a 5-year option to exercise, but once we exercise it, it'll give us 50% of a tin smelter that is actually located within Spain. It's actually only 220 kilometers by road between our project and that smelter, which is quite serendipitous because, as I said, there's no tin mines in Spain. So this is actually a tin smelter mostly doing secondary recycling products, but it does have the ability to do tin concentrate. Our due diligence and our working with the current owners, we're very confident it does primary, and it has done some primary con in the past. So we're working very hard, and part of our investment in those options is to upgrade the facility to make the processing of concentrate even more efficient. So basically we will become a vertically integrated mine to metal tin producer within the EU, and at this stage we don't see any competitors to that fact. There are a couple of guys that might mine tin, but not anyone that has a fully integrated solution like ourselves yet. For us, the reasons that makes sense, obviously the strategic and the political reasons are clear to have vertically integrated metal supplying the European market, but I'm a believer that all good decisions also have a strong economic basis. And one thing that's not widely known in the tin market, so it certainly wouldn't be known that well outside the tin market, is there's a very large premium in Europe for delivery of metal within Europe. So the London Metals exchange price for tin is nice and high. It's 3 times the price of copper. We trade about $30,000 a ton on average at the moment. There's an extra $1,000 if you deliver the metal within Europe. That is far and exceeding what we have modeled as the treatment and refining costs of smelting that metal within Europe. So again, there's a very strong economic case for why we should keep that concentrate in Spain and delivered within the EU. North America has an even higher premium, so obviously the option would be to sell metal into North America as well. So yeah, that's our Spanish project, and yeah, we're really at the back end of getting that project completed, financed, and into construction. First ore or first concentrate is currently forecast to be the back end of 2027. Talking to anyone from any other industry, obviously they'd see that as a long time, but obviously with your experience, Rob, and anyone familiar with the mining industry, we know that is only a short few years away in the scale of developing mining projects. So then moving on to our other asset, it's the asset that's been with the company longer, but it's certainly got a very exciting future ahead of it, is the Cleveland Tin Project in Tasmania. It's in the northwest of Tasmania, a very mineral-rich region, quite a long history of tin mining and base metal mining in Australia. Australia's only tin mine, operating tin mine, the Renison Bell mine, is located about 80 kilometres from us. The previously largest tin mine in the world, the Mount Bischoff mine, is only 8 kilometres up the road. And the Cleveland Tin Mine itself operated for about 35 years through the noods. Firstly, through World War I, providing tin to the Allies. Secondly, from about the mid-1960s until 1986, when the international tin cartel collapsed and the tin price went to very, very little for a few years. So we picked that asset up as an exploration lease. And yeah, what it has is it's got about 500 meters of vertical underground development, which has been developed up to modern size. So we can redevelop that with significant capex savings of not having to redevelop the decline. In addition to that, we have 7.5 million tons of hard rock tin resource that still remains. It does have a copper credit with it as well. And traditionally, the project produced both a separate tin concentrate and a copper concentrate. When we picked up the project, there was also some historic data that indicated there was what could be quite a large tungsten resource sitting below the tin copper resource at about 300 meters of depth. Subsequent to Elementos owning it, we did drill out the top of that resource, which came up with about 4 million tons of wolframite based tungsten mineralization at about 0.3%, which is a very good tungsten grade. And then below that, through some historic drilling, we'd identified a very large target of tungsten below that. It is a porphyry style tungsten deposit, so you do get these very large cylinders of ore coming from depth. And so this year we finally bit the bullet and we drilled a very large hole from the other side of the hill that no one had ever drilled before. And we drilled about 1,100 meters to get the right angle. And we drilled it through this exploration target. And we hit a very, very significant amount of tungsten, which we were forecasting and had modeled that. But I think what surprised us all was the rest of the critical minerals that we identified coming with that. I'll read them out because they're all new to me as well. But we basically had the tungsten coming through as wolframite. We had fluorite or fluorospar, depending which country you're in. It's got two different names. We have molybdenum, we have bismuth, and we also have a very interesting mineral called rubidium. Now, for those that don't know, rubidium is one of those very rare minerals, which we appear to have in quite high quantities. Currently trades for about $1.3 million per ton, but it's also one of those very niche minerals where you can't actually get a lot of data on how deep and how large the market is globally. So we're currently studying that mineral. The good thing for us is all these minerals at the bottom of this hole in Tassie are all continuous. So it looks like it should be amenable to some form of bulk mining. Obviously, very early in the stage to be making those statements, but the first thing you like to see with any of these mineralized intercepts is significant grades and, as much as you can, seeing continuity, and we've got both down in Tassie.
As a, obviously project developer, and as you mentioned, you got projects on both sides of the world, and also obviously speaking different languages. How do you sort of manage your teams and get the best out from, obviously, from a communication and output perspective?
So as most junior miners, we keep our staff and our employees quite small. We only have in total across Spain and Australia, we only have about 7 employees, ranging from some of them are part-time, most of them are full-time. We rely heavily on establishing very strong relationships with consultants and contractors. When it comes to Spain, yeah, we do have a handful of guys who are based on site. We have geologists, field hands, and project engineers that manage all the regulatory side. But when it comes to the feasibility work, we've really lent at this stage on some very skilled contractors. One thing we've done very specifically in Spain is Elementos is the parent company. We really describe ourselves as the shareholder. All our stuff is done under our Spanish subsidiary called Minas de Estaño de España, which is Tin Mines of Spain, the rough translation. And all our interactions with the market there are under the Spanish company with Spanish-speaking individuals. When I attend meetings, which I do very regularly with the government or senior officials, I always introduce myself as the shareholder of Minas de Estaño rather than pretending we're an Australian company running a company on the other side of the world. Now, obviously, as a junior miner, we do have a large influence in the decisions and the way that project's being developed, but we've staffed up a team locally, which represents us on all fronts at all times. I'll participate in meetings and I'll certainly speak from the shareholders and the owners' perspective, but I always have my project managers and my general managers presenting. We speak in Spanish. In those meetings, I have as I said, from my travels, I have a pretty good grasp on the language, but I certainly don't have it to business level. I can understand a lot of things being said. When I don't, I always ensure, I've got colleagues next to me who can fill in the gaps, which we either do during the meetings or afterwards. What I guess getting into that time zone thing, one thing I was very conscious when I came in is, I guess the traditional way of doing business is always Teams calls, emails, and phone calls to get business done. But what you do when you're working remotely in that, I think you really lose the things a lot of people get out of, I guess, working in an office, those casual conversations which just lead to great insights or, just catching up with people for lunch or whatnot. Now, why I get over there as regular as I can, but why I can't, catch up with guys for lunch as much or go for coffee, what we have really developed is a very casual relationship as well over using things like WhatsApp or the other chat formats. And my guys all speak fantastic English and write very well. And where we have times where that doesn't work, the translators are absolutely fantastic now. So we do utilize those. But basically, moving into those more casual forms of communication is really the way we've developed really good rapport within the group. It's where employees or consultants or contractors feel much more comfortable, admitting that they're not totally on top of something or needing help, or just letting me know, hey, I can't come in tomorrow, or I'm going to be away for a couple of days because my daughter's sick. We just really find that having that casual form of communication outside of the formal channels really smooths the waters. And as much as people start sharing photos of their families on their weekends, celebrating Christmas Day or whatever else. So we I guess we've built a rapport in a slightly non-traditional way, but it's been a really good way to cross both the cultural divide as well as just really bringing on that much more casual way of speaking, which us Australians are pretty good at the best of times. In addition to that, Tasmanian work, we're really doing that out of my staff-based geologist out of Australia, and that's much simpler than whether with the stage the project's at and the fact we're in Australia with a very well-known regulatory regime and everyone speaking the same language. It's much simpler, but again, the same touch points are what makes it effective. We catch up we utilize the WhatsApps and whatnot when we're not sitting in the office with each other. But in addition to that, we're able to have, meals and coffees and all those great things together as well, which really just, round off the hard edges of what can be quite a demanding job, and people can be under, quite a lot of pressure at times. So we certainly try to, make sure there's that casual communication channel as well.
We hear so much about niche further facing and technology metals entering supply deficits. Why, I suppose, in your mind, does tin stand out from the rest of the pack?
Yeah, hey, you're really talking to a tinophile now. I really love the metal, and I think it's got just a fantastic future, mostly because I see so many challenges in the supply moving forward, and I see it playing such a critical role in the energy transition and technology metals sector. One of the best ways to describe tin, and it's described industry wide as this, I can't claim ownership, is they call it the spice metal. Now, for a little bit of explanation of why it's called the spice metal, is because if you look at a lot of these other technology minerals, say like lithium, pretty quickly isolating a single technology to where majority of that's going, lithium ion battery. And because of that, in a lot of the analysis by consultants or commodities groups, it gets a lot of focus. It's when you get to the things like tin, which there's not a lot of tin in a lot of items, but there really is no substitute or no economic substitute to tin in these items. So tin's main use is as an electrical solder. So any electrical circuit has tin in it as solder. Previously, it was about a 50-50 blend with lead and tin. Obviously, lead's being removed from pretty much everything due to its toxicity, especially like solder, which you heat up and melt. Certainly, lead was quite toxic in that application. But for us, because there's a little bit in a lot of things, it gets the term the spice metal. It's the equivalent of going to a restaurant. You look at the menu, you see all the major you see all the major ingredients in each meal. Very rarely will you see salt and pepper written in the ingredients list, but I guarantee you probably every single meal you eat at a restaurant has salt and pepper in it. And if it doesn't, you'll probably send it back. So it's that critical ingredient that often doesn't get mentioned, but it's in everything. For us, the best equivalence we give is in an iPhone, there's about 10 cents of tin currently. In a washing machine, bizarrely, there's actually more, but that's because they haven't tried to miniaturize the circuits too much. There's about 50 cents of tin in a circuit sitting in a washing machine. For us, it is that little bit goes in everything. And because of that, it sometimes gets overlooked. Because of that, and because of its price inelastic, if the price of tin triples, there's really not a huge financial incentive for any of those manufacturers to look for a substitute. If the iPhone has 30 cents of tin in it, it's not going to change the price. If a white good has $1.50 worth of tin in it, it's not going to change the price. And certainly when tin has gone through some of its higher spikes, and it did hit $50,000 US a ton during COVID, there was no drop off in demand. So very price inelastic. Because of that, because of all those reasons, it also hasn't had a lot of, sorry, one thing I'll mention, because of that small amount and everything, it's also not a really efficient thing to recycle. Now, people do recycle it, but most of the recycling is the leftover bits you get from manufacturing process. It's called dross, the leftover solder that falls on the floor. It gets resmelted. But what they haven't really cracked yet is, say, like in electronic waste, trying to recover the tin. There's such a small amount in it and everything. And when you look at the economics of recovering metals out of a circuit board, first you grab the gold, then you grab the silver, then you grab the platinum group metals. When you recover all those things off the circuit board, maybe you recover the tin, but most likely the tin is in a bit of mess then because of all the processes they've done to recover those other metals. So recovering the tin becomes quite difficult. So there's not a huge recycling. There's been very little investment into the sector. As I said, in 1986, there was a cartel that tried to hold up the price of tin for the world. It collapsed. And basically for the 30 or so years since then, no one has invested in tin. So the only tin supply we have right now is basically the leftover state-owned or nationally owned vertically integrated groups. So then you look at who supplies tin into the world, and it starts to make sense again. You've got China pretty much mining and refining 50% of the market. You have another 25% coming over the border from Myanmar into the smelters of the south of China. You then have Indonesia doing about 20% of the industry. You then have Peru, Bolivia, a little bit from Brazil, and then you move to Central Africa, the eastern side of the Congo with all its conflicts, and into Rwanda. So there's no tin mining at all in North America. There's no tin mining at all currently in Europe. Very little in Australia. So really you're getting to a metal, a critical metal for very high technology purposes, which has very constrained supply right now. And we are going to be in deficit this year. And then you have the reliability and responsibility issues, which are rife. You know, a lot of those countries have very low environmental and labor standards. As well as a lot of it's coming from defined conflict areas. So you have a metal, even if those areas continue to reliably supply, which they're struggling to, there's going to be significant deficits by the end of 2030. Then you throw in a few more supply shocks, which are pretty much granted to come from those listed countries in the next 5 or 6 years. And you could have a very, very large deficit that we're moving into in the back end of this decade, which is then going to be the exact time we bring on both our projects.
I noticed that you're proposing a vertical integrated mine to metal tin strategy, obviously in Spain and the European Union. Why does this make sense for Elementos? Many other miners don't look to invest sort of in downstream. So I just wanted to just tell us a little bit about around that.
Yeah, hey, I think we're starting to see that slowly change, and we're not claiming we're unique. We're certainly unique in the tin industry at the moment, but we're not. I think we're starting to see a lot of people do this now. I think the tin industry, to be specific, about 90% of the smelting is in Asia. So the major countries that do the tin smelting are Malaysia, which has a history of tin mining. Thailand, again, a history of tin mining. And then you've got the smelters that have been built in the south of China to refine their own tin, as well as the stuff that comes over from Myanmar. And that's the market. Now, that's not a very efficient way to obviously to move your metal if you have to move it halfway around the world to smelt in Asia and then half the way to come back. So that's one of the reasons we looked into it. I think the other reason is the tin industry has been screaming out for vertical integration for a while. And I should say, a lot of the Chinese tin miners are vertically integrated. The Peruvians and Bolivians are vertically integrated, and there's a little bit of vertically integrated in Rwanda. None of these guys are listed, and none of these guys are currently, only the listed guys are proposing a vertically integrated strategy. One of the reasons is not many of these tin assets are in Europe or North America. And it's in Europe and North America where you get these tin premiums, these significant tin premiums, which easily cover the smelting, the treatment and refining charges and the smelting charges to turn it from concentrate into metal. So that's one of the clear advantages that we have in smelting within Europe. If you're a producer in South America that doesn't have a smelter close by, or Africa, you're just as likely to send it to Asia and pick between 1, 2, or 3 of the smelters there. But for us, having a smelter so close by, having it a clear goal of the European Union Critical Raw Materials Act to foster domestic supply, foster metal production, is obviously ticks those strategic and political goals. The Spanish government is very supportive of people doing the full vertical integration within Spain. But as I said, the key thing that makes this thing work is the economics. And currently, we're modeling about $400 or $500 premium post smelting, rather than having to sell it to a trader or a smelter. You have to transport it halfway around the world, insure it. I have 3 or 4 months of working capital financing until it's turned into metal, as well as the carbon emissions of all that extra transport and movement. It's just, for us, an absolute no-brainer. And it's, the economic case is there to support it. A lot of people in the tin industry a lot of the miners have been waiting for the smelters to go upstream. It hasn't happened yet. So there's a little bit of talk in the industry that some of those Asian smelters might start investing into the mines, but we're just not a company that's prepared to sit around and wait. We have an opportunity as good as we have present itself. We go out and seize it.
So obviously developing a mine in Europe, obviously no doubt has its challenges, and obviously you've alluded to a few during this podcast. What is the status of your project approvals, and how has the process been for you in Spain? And what advice would you give anyone looking to invest in, I suppose, a European or Spanish based projects, again, from your experience?
It's quite funny because I was having this conversation, and we have had our challenges, and I'm happy to detail those. I was talking to a colleague a little while ago in another company, and basically we were playing the game of, if you had a mining project and you could pick any location in the world, where would it be? And it's not as simple as answer as it would have been 5 or 10 years ago. There's a project in Australia, gold project recently, that was rejected when it was in its final approval with the federal government. And still a lot of question marks from the industry as why that happened. They seem to have ticked every box and done every bit of work. So projects still get blindsided by governments and regulators around the world. Africa's not as easy as it probably once was to get things done. And I think a lot of that's for the right reasons. We're getting governments to understand that their citizens want things done responsibly. So Spain, let's talk about Europe first. Europe's got a reputation of being difficult. And there's a lot of regions within Europe that I still would not want to be developing a mine. Spain is a bit of an outlier. The Iberian Peninsula, Spain and Portugal have had a long history of mining. Obviously, in the 20 or 30 years ago, mining really dropped off, and you do see that as in the industry. You see a lot of people in this late 50s, 60s, and 70s, and then you're getting a new batch of people around their mid 30s and 40s. But there is a gap where mining wasn't that favourable in Spain as well as the rest of Europe. That really seems to be changing. Spain is, and the Andalusian government is putting huge investment, effort, political capital into rebuilding the Spanish mining industry to stimulate jobs and economic growth. The European Union has just done a fantastic job with their Critical Raw Materials Act. Fortunately, tin didn't make their critical minerals list, but it is very close on their watch list, and we're very confident it will make the next critical minerals list. In saying that, our experience in Spain, it's been challenged. We did have our previous our previous permits, which we submitted in 2022. We made the decision after quite a long review process with the government to withdraw those applications, and basically went into an 11-month negotiation process with the environmental regulator to come to an agreed layout. When you talk to these regulators, they're not crazy, they're not insane. They just have views that might be different from your own, and they had some specific views on the usual key points. They wanted to minimise impact from the mine, and in our case specifically, that hit 3 key points which are common for many mines, and that was reduce the impact on trees, reduce the potential impact on animals and flora and fauna, and then, where possible, reduce the impact on water catchment. So for us, that required a bit of a redesign of the external infrastructure of outside our open pit. So for us, that's our rock waste dumps. We shifted them from having one large dump right next to the pit to 2 or 3 smaller dumps, located in areas with lower tree density. Where you have lower tree density, you're obviously affecting less bird nests and the rest of it. So that ticks the animal box. And then for us, we decided with the interaction with the regulator to move our tailings dam from the western side of our pit, from the eastern side of our pit to the western side of our pit, because it actually took the tailings dam into a separate water catchment. Despite our tailings dam being engineered to 3 or 4 times the safety factor required, the perception of a breach of a tailings dam is real, but by regulators and communities. And for us, there was a drinking water dam, 15 kilometres down the way that they were concerned if there ever was a breach, despite the low probability, the very, very low probability or likelihood that would ever happen, that was not an acceptable risk for them. So this is what happens when you go through the review process, and as much as it's frustrating to our investors and the management team to go through this process, in the end, we're going to have a better design mine, which has lower impact. And we're very confident when we put in our primary licenses, we're very much more aligned with the regulators. But in the end, the regulators are there for a reason, to look out for the best interest of the people and their citizens and the politicians that sit above them. Well, frustrating as it is, they're the rules, and certainly we're happy to work with them. In saying that, the interactions with the Spanish regulators have been quite, I don't want to say easy. It's always challenging because any delays are costly, but certainly the respect levels are there, the professional levels are there, and they're prepared to have a realistic, frank, and robust discussion to get to a mutually agreed solution. I can't comment for every other comment for a country personally from experience in Europe, but I believe there's probably some other countries where maybe you don't even get to the to the table to have that discussion. For us, the only other final thing I want to point out is with Spain is Andalusia is certainly much more pro-mining than some of the other autonomous regions. And again, everything I've said about Spain, I can't talk with much authority on the other regions, but certainly from a political side of view, very happy we're in Andalusia. And as I said, being a member of the Project Accelerator unit, we've got a lot of political capital behind us. We have the support of the local mayors. We have the support of the local people. We have no active opposition groups to us. We're in an old coal mining region where unemployment, because all the coal mines are shut down, is up around 45%. So these people are screaming out for jobs, economic stimulus, and certainly we're going to play a major role for re-stimulating the region.
Moving from Spain back to Tasmania. Obviously, Tasmania is an old historic, obviously tin mine that you're working on. With a obviously suite of critical minerals that you've already obviously explained. What does the sort of next 1 to 2 years look like for the Cleveland project? If you obviously had a bit of a crystal ball.
Yeah, hey, pretty easy to describe the way forward from here. This hole we recently drilled that identified all this tungsten and critical minerals is a bit of a game changer for us. So for us, the short-term path is clear, and I think the next steps are quite clear as well. The first one is we're currently doing some downhole geophysics down that hole. We're very confident that's going to help us to find some further drill targets. And for us, the decision to then go drill and resource up some extra minerals is probably the easy one. Following on from that, we do have some historic drill core to reassay. As I said, there's some historic drill holes into this tungsten resource, which we're now going to go back and reassay for all these critical minerals. That'll obviously very much, there's 26 holes we can do that to. So that's a very quick, easy and cost-efficient way of testing for these other minerals. And obviously that will make it much quicker to then upgrade these other minerals into a mineral resource. Once we have all this new mineralization sitting in a mineral resource, we'll then start our formal studies into the project. The first stage is a scoping study. That'll really determine the date of this project. And critically for us, we really want to establish whether we mine the tin copper resource towards the surface, the old resource first, or whether we go straight into the tungsten and the critical minerals below. The old mine and the decline actually goes down already into where those other minerals start. So from day one, we really have a pretty clear decision to make is to really structuring how these two resources are going to be mined over their mine life. In addition to that, in addition to the resourcing and that study, obviously just beforehand, we'll do some ore sorting test work. Because this is a porphyry deposit, we get these very clear quartz seams hosting all these minerals, and then we get sort of some barren sandstone in between. So for us, it should upgrade really nicely, and we should get, factors increase in both the grades and then obviously the reduction of the mass that will then go into the processing plant. So there's a real quite relatively cheap bit of ore sorting test work we can do. Following on from that, we'll do some preliminary metallurgical test work on these other minerals. We're quite confident on the flow sheets to the tin copper, obviously, from the historic operations. Tungsten's got a pretty simple flow sheet as well, which most likely can utilize the same infrastructure as the tin copper, and maybe with a little bit of infrastructure on the back end. But the rest of these critical minerals, we really want to get at least some preliminary ideas on recoveries and the ability to separate them before we take that through that scoping studies. Yeah, a little bit of extra drilling, a little bit of extra logging, a little bit of ore sorting and met work. Following that, I think we really then go into doing a scoping study and getting out that first company or project shaping report. And obviously, what our investors will like to see is probably the NPV number at the bottom of that. And certainly from there, we then make the decisions to continue to probably raise money in that project to take it through the rest of the stages into construction operations. Fair to say, when you get a project with this many critical minerals on it, there's certainly strategic, I just to say, economies around the world that have most of these minerals on their list. And it's fair to say the Cleveland project is our second focus right now. So for the company, we will probably look into evaluating strategic partners coming in, joint venture interest, to potentially speed up the development of that project quicker than if we were to sole equity fund that, while most of our focus is still on getting the Oropesa project into operations.
As a young leader, and especially a young leader within the mining industry, what core values and strategies do you prioritise when managing, obviously, a diverse and multidisciplinary team, and I suppose in two different countries?
My number one is authenticity. I just try to tell it how it is. I think the best way to lead is for people to see you're authentic, to see you're passionate, and where you can, and you can't always, as a managing director, give people full context on every decision you make. But where possible, give people context. People don't like to be told what to do without understanding the reasons why. So certainly with our team, we have lots of whips and lots of catch-ups together. We try to make the forum very open to allow people to ask questions. But the other thing we've set up, both projects, but specifically the Spanish project, is we develop our projects through like an integrated owners team. So because we have a core group of staff, but we do rely heavily on some consultants, and some of our consultants are nearly full-time employees themselves, I don't want there to be seen any difference. I don't want employees to see themselves higher on the hierarchy than our consultants. So we do work on a very flat structure. We do work with on an integrated owners team basis, where I reckon if I actually ask people to vote, half of the people wouldn't be exactly sure who was an employee and who was a consultant or a contractor. Now, some people would see that as maybe a bad thing, but we certainly instill in everyone. They're all part of the team of the project, the Minas Estaño team. That integrated owners team works as a very tight group, and everyone's got each other's back. So context where possible. And as I said, having very contiguous teams that work well together, irrespective on exactly where everyone comes, where they come from, or from which team or consultancy or contractor. Now, obviously, that's ideal. There's obviously times where, staff get treated a little bit different, whether it comes to how we treat Christmas holidays to some of the others. But, where possible, we try to treat everyone. And as everyone in my team knows, I'm only, no matter what time of the night or day it is, I'm always available, no matter what level the employees are. Obviously, if I'm asleep in Australia when they're asking me a question, they might not get a quick answer, but they certainly know when I wake up at 5 or 6 a.m., I'll do my utmost to get a response to them when I can, and they're very appreciative.
Yeah. And lastly, one of you can just give us the outlook, short to medium term outlook for Elementos, and obviously with a focus on your flagship asset in Spain.
Yeah, for us, as I said, we're right at the pointy end of getting our feasibility study out. So that will be quickly followed by project financing discussions, both on a debt side and on the equity raise side. There's no avoiding the fact the equity markets aren't flush with cash right now. So because of that, we will look at the full range of ways to fund the equity to develop the project, whether that's through strategic partners, agreements with off-takers, and the rest of it. We'll work with the full gamut of financing partners to bring the Oropesa project on. Because of our option over the smelter, obviously we'll make the decision of when we exercise that option. Potentially we exercise it earlier and bring in some tin from other sources before our project's online. Other option is we'll just time the exercise of that option with Oropesa coming online, and we'll toll through that and obviously sell the money into the European market. So that's really our focus there. We are talking to some significant metal off-takers as well, and that'll obviously play a way to go into that funding mix. On the Tasmanian project, as I said, the focus right now is getting a better definition of what we've got down there and really shaping that first business case through the scoping study. Again, we are, and we've published this in our quarterly reports, but we are talking to some strategic partners down there already from economies that have majority of these minerals on critical minerals list. So certainly there could be some action there on the farm-in and a joint venture level. So we'll progress that as well. And thirdly, our ultimate goal right now is to not get taken out by someone else while our equity value is relatively low. So, we're very fortunate. We've got my chairman is a major shareholder. He holds 20% of the company. So we're not super worried about an aggressive takeover, but more and more people are understanding the value of tin, and certainly there's parties out there looking to do some corporate activity. So we'll maintain our focus on developing the assets. We're confident the equity markets will come back to a more rational state, probably when interest rates drop off a little bit. And we're pretty confident that'll happen next year. In addition to that, stay focused on the assets, keep the company funded, and bring some returns to our shareholders.
Joe, thank you for your time. Really appreciate you sharing your journey, telling us about Elementos and also obviously the assets in both Spain and Tassie, and sharing your views on maybe more junior mining professionals and how they should look at their career if they're looking to develop their career into C-suite positions in the future. If our audience wants to reach out to you, if they've got any questions, if they want to follow the story, how can they go about doing that? What social media platform channels are you on?
Yeah, so we're the two we focus on LinkedIn. So you can find Elementos Limited on LinkedIn or search myself, Joe David, 2 first names. So it's pretty easy to remember. Or in addition to that, we do publish on Twitter or X as well. So you can find us on either of those platforms. The handle on Twitter is @ElementosTin. Other than that, if you go on the ASX and look at any of our published announcements, our ticker and our code on the Australian Stock Exchange is ELT. If you go on there, find our public announcements at the bottom of every single one, you will find my phone number and my email address. Please feel free, if you've got any questions, to reach out and talk to me on either our projects, Elementos, the corporate vehicle, or as Rob said, even if you had any questions, personally, about your career or anything, I might not be able to answer them all, but certainly I'd be happy to give some advice at the appropriate time.
Yeah, appreciate that. Joe, thank you. All the best for this upcoming year, 2025. I hope you have a great start, and it'd be good to get a catch up later on this year if you want to come back on and give us an update on any of those projects.
Yeah, I'd love to, Rob. Thank you very much. Hopefully it's a big year for yourself. It'd certainly be a big year for Elementos, and look forward to catching up next time.
Yeah, great. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. This is the start of a new year, 2025. So please keep sharing these episodes far and wide. Obviously, we've been speaking about mining in Spain, and we don't often have guests coming on speaking about mining in Spain. So please share this around Europe and obviously Australia as well, but also outside of those countries. Thank you for your support. Have a great 2025 for the year ahead, and really appreciate your continued support. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.